Section 54B. To remember Section 54B, you remember as Buffalo. Section 50 Buffalo. Just buff, you remember buff. It will give you a recall that buff. Why I've named it as buff, I'll tell you. Wait, have patience. In this also, this section will be applicable in the same manner if you have earned a capital gain, but the asset will be changed. In our example, there was a residential house property. Now the capital asset will change. Let's see what the capital asset is right now. First, the SSC should be individual and HUF. Asset transfer should be urban agriculture land. Urban agriculture land means what? Firstly, understand what does urban means. Urban means all metropolitan cities. They are all urban cities. The urban agricultural land, if urban agricultural land is sold, and the period of holding should be either short term or long term, so it doesn't make a difference to you, so you don't need to see this condition over here, because short term or long term doesn't make a difference. Purchase of the new asset purchase should be any agricultural land, urban or rural. You are understanding? Only urban can be sold and get the exemption. If a rural agriculture land is transferred and you are purchasing, and you can't then avail this exemption. So you have to be very cautious about this when you are solving the sum. You have to see whether urban agriculture land is sold or not. If it is given rural agriculture land is sold, then you should think, it is rural agricultural land. Rural agriculture land can't get exemption under section 54B. Section 64B, because land, agriculture, buffalo is the person who drags who does hoeing and what they call, and I don't know. They do that farming stuff in the farm. So buffalo, agriculture related is buffalo. So you can easily understand what section it is. Section 54B, buffalo. Any agricultural land can be purchased in urban or rural area. The purchasing of asset, after selling the asset, there is no criteria, no specific term for purchase of agricultural land. It can be either urban or rural. The exemption will be available in the same manner: gross long-term capital gain or amount invested. If the gross long-term capital gain is 25 lakhs and amount invested is 50 lakh, we will be eligible to take only 25 lakhs of exemption. That means our gross long-term capital gain less exemption 25 lakhs will come to zero, and we don't need to pay any tax of capital gain at the rate of 20%, or short-term capital, the slab rate will not be calculated. But if the urban agricultural land is sold, the new agricultural land, that is any agricultural land, urban or rural, should be purchased within the period of 2 years. After the period of 2 years, it won't be applicable. If the asset is sold and after 1 year the asset is purchased, this asset, urban or rural agricultural land is purchased, the amount for 1 year should be transferred to capital gain deposit scheme account, that is CGDS account. And if the above provisions are not followed, there is a note. There is a note violation. If we violate this section, there is a note for this. I hope you are not copying the table in advance and just listening. Please copy one by one. Don't just copy it down at once. It won't give an effect. I tell you, you have to read this entire table and it will memorize easily. At the end of the lecture, I'll do a whole revision of all these sections, 6 sections. So don't worry. Section 54B, what does it say? The SSC should be individual. He should be having an agricultural land, but in the urban area, and after selling of such agricultural land in urban area, irrespective of whether it is a long-term or short-term capital asset, he can purchase any agricultural land, whether urban or rural. If so, within the period of 2 years, he can get the exemption, gross long-term capital gain or amount investment, whichever is low. If the amount is not invested, then such amount should be invested in the should be transferred, not invested, should be transferred to the capital gain deposit account. And when the actual purchase is done, then the amount can be uncashed from the CGDS account and utilized for the purchase. When you are doing this long-term transfer to the CGDS account, you will be able to avail this section 54 or section 54B ka exemption if it is given in the question that the SSC has transferred his his long-term capital gain in the CGDS account. So you don't need to pay tax at the rate of 20% or the slab rate. You have to just assume that you have purchased, but when you actually purchase, that time you will get exemption as the same. You won't be getting twice the exemption. At the first time only you will get the exemption. If you invest, then that time you don't need to do anything, just you invest. If it is shown capital in the CGDS account, then that's enough. Such high level sums won't come. I'm just making you all explain how it happens. Section 54B, I hope you have understood what section 54B is. Please copy it down. I hope you have copied till here. Copy it down over here. I hope you have completed. Let's see our next section. What is our next section? Section 54D. Section 54D. What does section 54D says? SSC. SSC is all SSC, any SSC, whether he's an individual, he's an HUF, whether partnership firm, whether company, any person, any SSC. If the asset transfer, what does asset transfer means? In short, sale. What do you mean by asset transfer? You know what does transfer means? That is sale. The transfer is of land and building for industrial undertaking. The asset that have been sold is land and building for industrial undertaking means, just understand the word industrial undertaking first, then I'll make you explain what does it mean. Industrial undertaking means the land and building that have been specifically constructed or bought for industrial undertaking. Industrial undertaking means for the industry the land and building are bought, and such land and building of industries have been sold for the purchase of new capital asset of land and building for industrial undertaking, same as asset transfer. If the industrial land and building are sold from one area and from in another area it is purchasing the same land and another land and building for the same purpose, that is for industrial undertaking, then only this section is applicable. Section 54D. Trust me, this section rarely comes. The highly coming section is section 54 and section 54 EC that I'll be teaching you when this section gets completed. So the next section is section 54 EC, so don't worry. So just understand, you have to have a knowledge of all this. It might come for the short notes, or it might come as a fill up or a true or false. They might ask a 4-mark small question on this also, so you don't need to panic. You can take an exemption over here also. So just chill, just understand it is not something very difficult. I have made your life so easy, so just relax. In this, the period of holding of the land and building and industrial undertaking should not be, there is no specification that it should be long-term capital gain. It can be long-term capital gain or it can be short-term capital gain. The asset transferred should be land and building of industry, not, so I'm making industrial undertaking of industry now, land and building of industry, and purchase of land and building for industry only, not for any other purpose. The asset transferred and the same asset should be purchased, then only the exemption is available of this gross long-term capital gain or amount investment, whichever is low. If the land and building of industrial undertaking is sold for 20 lakhs and we have earned the capital gain of 5 lakhs, and we are purchasing another land and building for industrial undertaking for say 30 lakhs, then we can use 5 lakhs, 30 lakhs, whichever is lower. I assume you are saying 30 lakhs. So 30 lakhs will be taken as gross long-term capital gain, less exemption under section 54D, 5 lakhs, and long-term capital gain comes to 0. But such process should be within 3 years after the transfer, because as soon as you sell the land and building, it is not possible that tomorrow only or within 6 months only. It might take 1 year or 1.5 years to find a specific land of that is required for industrial undertaking. So within 3 years after the transfer date you are eligible. That means within 3 years you can purchase. Till 3 years, if you are purchasing at the year 2.5 years, then till 2.5 years you have to transfer the capital gain amount to CGDS account. But at the time of purchase 2.5 you can uncash it and less, and you will get exemption. So this is all very simple. if this all sections, the above sections are not followed in the manner, then there is violation. So there is a note for violation. What you have to do in violation, you have to charge again back that capital gain that you have taken as exemption. So I hope you understood this. Next part on section 54 EC. I hope you have not copied. So take it down. Pause the video and take it down. I hope you have copied. Pause the video. Next video on 54 EC.